We would argue that there's plenty of oil and gas in the world, and that the pace of technical innovation will dictate how expensive it'll have to be for us to meaningfully develop it and extract it. There's all manner of massive oil discoveries in the world that have not yet been developed for political or environmental reasons that in a big enough pinch, we probably could. Recently, ExxonMobil put out a report that it had doubled its productive capacity in the shale patch. I have yet to see any follow-up or how real that is. But technologies that didn't exist 10 years ago are commonplace today. The pace of innovation, we recently wrote that contrary to what people think, the commodity producers are among the most technically sophisticated organizations in the world. And every day, tens of thousands of brilliant scientists and engineers do the dizzying array of hard work that makes our life easier, which makes our disdain for them rather peculiar. But if we have truly run into a technical wall, then I agree that it becomes incrementally challenging to develop oil and gas resources on a go-forward basis. I don't suspect, well, put it this way, historically, it has been a poor bet to fade human ingenuity.
Right.
That's our view.
Right, because fossil fuels are energy, and energy breeds innovation. You can't have innovation without energy. Like you can't just breed, AI, for example. I know that's like the hot, the shiny new toy at the moment, but with sticks and stones, right? So you've got to pull on the existing energy to create innovations to pull out more energy in a more efficient and effective way.
And if we really got serious about it, we would just start building nuclear reactors hand over fist as quickly as we can, systematized, because the energy return on energy invested there dwarfs even fossil fuels. And the reason that nuclear is expensive and slow is by design. Those are political choices, where the environmental lobby has succeeded in slowing down nuclear and making it more expensive at every turn. And if we decided that we didn't want to do that anymore, there are other ways for us to get primary sources of energy. And for example, there's lots of things we could do with nuclear today that seem impossible to do without fossil fuels, but in fact are quite practical. Just one small example, the global shipping industry is accountable for a significant portion of carbon emissions. And today that's all powered by diesel. It's totally theoretically possible to build micro nuclear reactors like we have with the nuclear submarine fleet in the US. Of course, it's military technology and people would object to it, but in theory, there's nothing that stops us from doing so. And then to give another example, industrial grade steam, which we wrote about in a piece called Gaining Steam. And the production of steam for industrial purposes on brownfield sites represents more carbon emissions than the combined personal and aviation transportation sectors, which comes as a surprise to people. And Gen 4 type nuclear reactors are capable of producing reasonably hot, reasonably useful industrial grade steam that could power a lot of the processes that need it and abate a significant portion of our emissions there. And so these things are theoretically possible, and the amount of uranium that we have and thorium that we have, and the amount we could go get if we needed to, because the price of uranium is an irrelevant afterthought in the cost of operating a nuclear power plant. We have access to technology. And then, of course, one of the reasons why we are always interested in solar and let's say less bearish on solar than we are with wind, which we think is just a walking industrial bankruptcy, is because the Earth is bombarded with so much energy every day from the sun, and we wouldn't have to harvest incrementally much more of it to make meaningful impact on our lives. And so I do think you could convince yourself of a lot of things by looking at data and depletion rates and pace of discoveries and capital investments, but hidden beyond that data, out of reach of the analyst, is the invention happening in the lab today that we don't yet know about, or the breakthrough accidental discovery out of the field that a roughneck has observed and reports back to the boss. These types of things are pretty chaotic and difficult to model. And we would generally say that given the right motivation, i.e. price, there's a clearing price for everything.
Right. And I'm glad you mentioned nuclear power, because I do want to pivot over there in a second. But here's the chart that I was alluding to. I know we can't really measure out future innovations. We don't know what we don't know. But this is one of the interesting charts that Simon sent me. And one thing that was interesting is simply because biofuels, I mean, oil here in blue makes up a smaller and smaller share
Yep.
of gasoline.
Correct.
So, you've got $80 a barrel oil, but then you've got, I mean, at least in my neck of the woods, about 350, 370, whatever, somewhere around that ballpark. But is this why gasoline prices are so high, despite oil kind of consolidating in a around the $80 mark?
The price of gasoline is a complex economic byproduct situation where demands for diesel and jet fuel and asphalt and petrochemicals that also come from a barrel of oil will impact the price of gasoline. Layer on top of that our refining capacity and our unwillingness to build a major refinery here in the U.S., which makes us reliant on imports for our finished goods in many parts of the country. I will say I've seen this chart, and the data is clear, and I agree with the data, but the orange and yellow inputs are very, very energy intense inputs that engineers and chemists can figure out how to use. And so I wouldn't necessarily focus on the 84.6 to 80.3 decline. I would focus on the 102 to 100. And with updated data, that probably looks a little bit better because, again, natural gas, NGL is as energy intense as oil and is a very useful product. And this, of course, brings up another topic, which is we have so much natural gas in the U.S. that in parts of the country we can't give it away. And if we got in a true energy pinch, we would figure out better ways to use natural gas. And so when you study parts of the market in isolation, you can convince yourself of something that may or may not be true. Like I wouldn't neglect what, quote, other liquids and NGL are on this chart, because there's a reason why they're sort of counted together. This is a significant amount of energy that we are producing.
Gotcha. Yeah, that makes perfect sense. Actually, it's kind of univariate when you put it that way.
And let me be very clear: I'm not criticizing Simon's view, and Nate Higgins holds a similar view, and I'm just giving the counter interpretation, based on my own sort of personal experience in industry, that human ingenuity, just classic example. Our refinery network in the U.S. is ill-suited for the grade of oil that we produce in the shale patch today. Those refineries were built to handle basically Venezuelan and Canadian heavy crude. There's the thing that stands between us and having a fleet of refiners better suited to process the material we're producing domestically is nothing but politics and money. And in the right scenario, we would invest the capital needed to expand the refining bottlenecks that we have today and make us less dependent on the ability to swap various grades of oil with other countries like we do today. So in a world where oil goes up to $200 or $300 a barrel, there's all manner of projects that suddenly become very economic and politically necessary, and the motivation to cut the red tape to get the intelligent things that would be done would be very high.
Right. Yeah, makes perfect sense there. This is kind of out of left field, but before we kind of close on the oil topic, there's a school of thought out there that says that oil hydrocarbons don't come from fossils themselves, and fossil fuels are kind of like a misnomer. What do you think of the abiotic theory of oil? Do you think that has any legitimacy?
I read Thomas Gould's book, The Deep Hot Biosphere, many years ago, and I picked it back up a few months ago and read it again. It's a controversial topic, and quote unquote experts in the field will dismiss it. I would partition Thomas Gould's hypothesis into two parts: the abiotic nature of oil, which is controversial. The second hypothesis that he has, which I find pretty seductive, is that Earth itself originated deep underground, and that photosynthesis was a late stage Darwinian development, and that in fact he suspects that if you looked below the surface of many planets, you might find life. And the two hypotheses are connected, because his abiotic theory is that Earth has vast oceans of primordial methane and buried deep underground, and that the primitive forms of life that first evolved on the planet then feed off of that natural gas and make oil. And so in his view, oil is the waste product of life, coming the other way, not the decayed product of plant life, but it's
kind of like how the honeybees make honey.
Yeah, and so I would say that I find the subterranean or Genesis hypothesis, to put a phrase on it, to be very interesting and difficult to nullify. There are other pieces of evidence in the book that are interesting, including the association of helium with natural gas and a few other things. But by and large, I would say the consensus of the scientific community is that the abiotic theory does not hold up. I would say that the strength of that consensus is probably not what the global warming crowd would call settled science, but I think a preponderance of experts who are trained in the field and know more than I do would say that they would fade the abiotic theory, although I find it interesting, and I would probably like to do a bit more research. We've pondered writing a piece about it, but it's become so controversial that in some people's eyes, merely contemplating whether it's possible would disqualify you as a source to be listened to. It's gotten a little bit heated in that regard. Yeah.
Interesting. One thing I like to point out is that a lot of the criticism towards free market and just like when you find distortions in the free market, there's a lag effect with the market. Like things aren't always going to be in optimal position, when you want to look at it. But given enough time, the market will course correct.
That is a huge, huge, huge point. After 70 years, I still need to remind myself of that. I look at the strength of the U.S. economy as a consequence of higher interest rates. And I need to remind myself that higher interest rates didn't begin to affect the economy of the United States in the decade of the 70s for 6 years. These punches have delayed impacts. And it's what you just said is of critical importance for people to think about. A sense of history is required when you try to anticipate the impact of policy decisions made today. You won't feel them next week. You'll feel them in 2 years or 3 years or 4 years. That's an absolutely critical point that you made.
Yeah, and it's a point that's often exploited by kind of socialists, trying to make their point, where like they find distortions in the market and they harp in on that one thing, but then they neglect the fact to actually run the experiment, further down the line and realize that the market would self-correct over time because the incentives are changing because of that exact event.
Well, that's very useful for the socialists. They have to measure things in the short term, because in the long term, they're the most destructive humans on the planet. The track record of socialism and central control is absolutely unblemished by success. Whether you call it communism or whether you call it fascism, state control of the economy, state control of individuals over time doesn't work. So they have to measure it in the short term.
Yeah, it's all predicated on short-term thinking. Yeah,
in the long term, they have 100% track record of failure.
Yeah. So let's pivot over to geopolitics for a second here. BRICS this past week introducing a couple new members into the fold: Saudi Arabia, UAE, Iran, Argentina, Egypt. And amongst that list of that cohort, you've got Saudi, UAE, and Iran, some of the biggest oil producers in the world. If you look at the entire BRICS lineup, it accounts for 70% of all of oil production around the globe. Compare that to the G7, you've got the US and Canada, which amounts to about 30%. So how does this kind of asymmetry, what does this mean for the oil market currently, with oil sitting at $80 a barrel at the moment?
Nothing.
Okay.
They have 70% of the supply. We have 80% of the demand. There's a market. Yeah. What would happen to Saudi if they withheld supplies?
We would need the price would go up. We would need to find it somewhere.
Who would they sell it to?
That's true.
What would
Yeah.
Saudi do?
The biggest buyers are, like you said, the U.S.,
What,
the U.S.
what
and
would
Canada.
what would the Saudis do without Western demand? I mean, the
They'd
BRICS
have a glut of oil.
The BRICS is a wonderful, wonderful, wonderful topic for many reasons. What I see in terms of the current BRICS grouping is two things. The Chinese attempt to break American hegemony and participate. And I think that they would be completely unsuccessful, except for the efforts of the United States. The idea that the enemy of US dollar hegemony as a reserve currency originates in Moscow or Beijing or Riyadh is stupid. The only enemy that the US dollar has is in Washington. On the one hand, we've devalued US Treasury securities by wrecking the credit quality of the country and holding the interest rate down below the purchasing power degradation of the dollar, which is to say, we've made US Treasury securities the deepest and most liquid financial market in the world. We've devalued those securities at the same time that we've weaponized the currency. The SWIFT banking system isn't ours. And the idea that the Russians had trusted us enough to buy $300 billion worth of US Treasury securities, and then we stole them from them because we disagreed with their foreign policy, while it may or may not be admirable, depending on what you have to say about Russia, did one thing to the US dollar. It told people around the world that held US dollars that to the extent that of their own free will, they entered into transactions that the US disliked, that the US would abrogate or default on their obligations to those lenders. BRICS is entirely an understandable reaction around the globe to people who have a poor feeling for US hegemony. Some years ago, I was involved sort of circling the globe, selling fairly sophisticated Sprott products to sovereign wealth funds. And I remember, and I won't name the country, but I went to an Asian country that held about $3 trillion worth of US treasuries. As a US citizen, this was flattering and amusing to me. And after I got to know my counterparty well enough, I said to him, not being politically incorrect, it wasn't him, this is interesting to me. On the face of it, it would seem that you guys send us computers and ships and steel and cars, and we send you back pieces of paper with dreams painted on them. While this seems like a good deal to me, I wonder how it seems like a good deal to you when you look at aggregate US debt and the nominal yield, pardon me, the real, not the nominal yield you're getting on the securities. This sort of feels like a lie to me. And my counterparty smiled a little bit and said, I understand what you're saying, Mr. Rule, and what you're saying is true, but yours is a deep and liquid lie, unlike all of the other lies we're being told. And then I asked him point blank, do you trust us? He said, of course not, but we trust you more than we trust each other, meaning the other nations. Doug Casey once said that the US dollar, US bond is I owe you nothing, and a Euro bond is a who owes you nothing. With such stalwart credits as South Africa, Russia, and Argentina, the BRICS is a nobody owes you anything. Now, it's being popularized as an emerging currency. It will not be that. These nations will not subsume their national currency or will not forswear their ability to engage in domestic economic activities in favor of a common currency. And the amount of gold they hold, while fairly formidable, isn't sufficient as an anchor to a gold-backed rather than a gold-denominated currency at any rate. I think what they hope to achieve is a settlement mechanism so that to the extent that China enjoys a quarterly trade surplus with Russia, it can settle in some denomination outside the US dollar, at least partly. And so that reserves can be held in a fashion that's more secure for them than US treasuries. And in that regard, I think that the BRICS may be on to putting a dent in the unipolar world that is the U.S. Treasury market and the U.S. dollar. But I think way more is made of it. My friends in the hard money movement, when I point out that there isn't enough gold available to secure the currency, chortle with glee, not at this price, but at a higher price. And they sort of assume that a coalition of the lame, the halt, and the blind will bid the gold price up to $10,000 or $12,000 an ounce, which I see as highly unlikely. I think it might go to $10,000 or $12,000 an ounce because of the bankruptcy of the BRICS and the bankruptcy of the United States. But that's a different circumstance.
What about when you compare gold to the money supply? You know, where it was, I guess in the 70s, we had a lot less money circulating.
I think that gold bugs need to understand that, and I am one, by the way, that gold is just another medium of exchange and a store of value. That, by the way, isn't any cause for pessimism. As I understand it from J.P. Morgan Chase, no friend of gold, that the market share of precious metals and precious metals related assets in the United States is 0.5%, which is to say the total value of savings and investment assets in the United States is 0.5% in gold and silver and precious metals related investments. The 4-decade mean is 2%. My belief is this. My belief is that disruptions in the currency markets and the amount of debt and deficit in the U.S. system will cause demand for precious metals related assets to revert to mean. If that happens, I'm not suggesting that the price of gold will ever reflect the amount of currency in circulation. I'm suggesting that gold will go from historically stupidly underowned to mean. If that happens, demand for precious metals and precious metals related assets will increase fourfold, which I think will happen within 5 years. I believe, and I'm trying to figure this out for myself, by the way.
Right.
I believe that the last 4 decades that we've lived through have been, in economic senses, the most benign in human history. And I don't believe that, despite cracks appearing in the facade, that there's very much fear in the world yet. And I think a little bit of fear, maybe even a return to prudence as opposed to fear, would be sufficient to restore precious metals and precious metals related securities into enough favor that they return to a 4-decade mean. J.P. Morgan Chase doesn't have statistics, but they estimate that the market share of precious metals and precious metals related assets in 1981, the sort of apogee, was about 6%. If we ever had a circumstance where the level of fear that we experienced as a society was consistent with what happened in the decade of the 70s, and I'm not saying that's going to happen, but if we ever did, then you would have a circumstance where the market share of precious metals and precious metals related assets went up 10-fold or 12-fold. Don't bank on it, but consider it a possibility.
Fascinating. Well, Rick, we're closing in on time. I want to give you enough time to kind of tell us where we can find you and tell us about your ranking service as well.
If you care about what I have to say about natural resources, and by the way, I do better on the micro than the macro. I just talk about the macro because it's interesting. I want to give your listeners an incentive to do that. Go to my website, ruleinvestmentmedia.com. List your natural resource stocks. Please no crypto. Please no pot stocks. Please no tech stocks. And I'll rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues if I think my comment on those issues might have any value. There's no cost to this. There's no obligation. Once again, ruleinvestmentmedia.com. Note that I'm celebrating retirement by starting a new bank, Battle Bank, a bank where, as an example, we will lend against physical precious metals holdings. A bank where you can have a money market account or a CD in 22 currencies, not just the US dollar. A bank where your IRA can own single family or multifamily real estate that you operate legally. If you care about a sanity-based bank where they believe that your money is in fact your money, in the question and comment section at Rural Investment Media at the rankings page, simply write bank, and we will give you more information about Battle Bank, which is currently in organization. Once again, ruraleinvestmentmedia.com. I'll rank your stocks, and if you are not happy with your current bank, which I suspect means all of your listeners, write bank in the question and comment section.
Excellent. Well, we will have those links in the description down below. So be sure to check out there, guys, if you're interested with what Rick has to offer. I actually have one stock, if you don't mind doing one on the spot for your ranking. Sure. Global Atomic.
Global Atomic, I've suspended from rankings because I'm not smart enough to understand the near-term impact of what's happening politically in Niger. I've been in touch with the Romans, and mercifully, at present, their part of Niger is fairly calm. The Nigerian authorities have said that life could and should go on. I'm not a political analyst. I had Global Atomic at a 5. I like the grade. Niger was a country that hadn't come to grips with uranium production that wasn't in French control. So the political, economic, and legal protocols around both GOVIEX and General Atomic were ones where I wanted to see fiscal protocols established so that I could comment on them.
So is a 5 good or bad?
A 5 is, I own a lot of 5s. 1 is best, 10 is worst. So 5 is right in the middle. Note that among junior mining companies, my median ranking is sort of 6.5 or 7. I consider most of them to be unownable. I regarded General Atomic as ownable, but now I've suspended both it and GOVIEX because I'm not smart enough to understand the political ramifications of what's happening there.
Gotcha. Well,